Anthony Special here with Special Analysis, unedited and on the edge of the market. Hope you're having a wonderful week. So this was an opportunity the readers of Special Analysis Weekly had a chance to capitalize on, and I really would like to break this down for you. You guys know I do these videos for educational purposes, so you kind of get a feel for my approach to the market. It's long-handed, hand-drawn analysis. Why do I do this? People ask me all the time. There's so many different indicators out there, so many different things that exist. Why would you take the time? Listen, I am putting my hard earned money at work when I take a trade. For me, it's about having an intimate connection to what I'm doing. In order to do that, I need to feel the chart. I need to draw on it. I need to understand it. I need to overcome any obstacles or objections that I may be able to, um, realize. And that is really, uh, the perspective that I take. So this is just another prime example of the way I approach the market. This is JJU. This is a ticker based on Bloomberg Aluminum. I watch a lot of commodities. Commodities which is what drew me to the market initially. From Main Street to Wall Street, and this is one of the tickers that is in my weekly report. So the weekly report, for those of you who don't know, has a minimum of 50 tickers analyzed, interpreted. If there's opportunities identified, buy, sell, stops, percentages, the whole 9 yards. So it's really intense. It takes me, 20 to 30 hours a week to put together. It's really it's quite an advanced piece. But those who have it and subscribe to it on a monthly basis really seem to enjoy it and have found some great opportunities. And this is one of them. So I'm going to zoom in a little bit. We'll kind of dive into how this transpired. So obviously, you see, we had a downtrend, we had a uptrend, and then we have another downtrend. So this is the area where the buyers and sellers really kind of duked it out. So we were looking for the opportunity to short this, but we kind of had to wait for it to set up. So you can see the market came down, buyers really took over, pushed it back, and then finally settled in. So we had a little price improvement opportunity here. So this was the trigger to sell, and this is the candle that opened for us for the entry. So you can see the trigger was at 58.78, the fill was at 57.98. So the open, the following week had offered some price improvement, and that happens, sometimes. I shouldn't call it price improvement. Actually, it's price advancement. So it's really price unimprovement, but a price adjustment. Let's use that term. So, we had to chase the price a little bit. We could have gotten filled, but here nor there. This is literally less than $1 apart. So it's minimal, in hindsight. Then we had the opportunity to watch this market, work its way down here. Our original target was placed at 51.64. You can see it, that thin line, but this was a trend favoring trade, meaning as time went on, the target descended, which was favorable for a shorting opportunity. So it didn't start to ascend until we hit this blue line below. So what happened was the market came down, kind of stumbled a little bit, stalled a little bit, and then finally ultimately filled our target right here. It actually tested the line below, the physical support structure. You can see that in this candle here, it actually tested it. Now I employ a 1% confirmation to enter the trade, and I also employ a 1% buffer to exit the trade. Why? Because I'm not greedy. Bulls make money, bears make money, pigs get slaughtered. There's no reason, to be greedy when I know I can still get in the trade. I know I can still get out of the trade. And statistically, that 1% buffer puts the odds of the trades working out in my favor somewhere between 80 to 92%. From studies done here in the country and abroad in England, in the United Kingdom. So, without getting into all those details, this essentially offered us nearly 18% return from adjusted entry to adjusted exit we had nearly 18% in 1, 2, 3, 4, 5, 6, 7 weeks. So not too bad. It took a little bit of time, but it did what we anticipated it to do. And now you can see prices bouncing off of it. So I want to just take a moment today, do a case study, kind of walk you through what my thought process was, how it set up, how it transpired, what it turned out to be. Um, and you guys, if you want to learn more about the weekly market report, there's links inside the email, obviously. But focus in on these videos. This is where the education is. And if you have any questions, comments, concerns, need some help, reach out. This is what I do for a living. I'm happy to help anyone who needs it. You can reach me info at Special Analysis. You'll get a response directly from me. I'm a one-man band. I do not have a staff. And the reason I do that is because I want to be intimate with my client, just like I'm intimate with the market. I believe that is where you find a level of service and success, that is hard to find elsewhere. So I appreciate your time today, as I always do. I hope you'll join me tomorrow and enjoy the rest of your day.